1.
Welcome everyone to this OMFIF DMI session with Giesecke and Devrient Currency Technology on time for the pivotal move on CBDCs. Very pertinent discussion, important time for lots of reasons that, of course, you can all guess. I'm currently sitting in Dallas in the US, about to talk about the world of stablecoins, and we'll come back to that later. The developments on CBDCs are quite complex and interesting. We've conducted an extensive survey of central banks, many of whom are listening today, on current intentions, attitudes, intentions to buy, problems and opportunities of CBDCs, working together with Giesecke and Devrient. And we're going to go through those results in just a moment. And it is a moving scene. There's quite a lot has changed since we last did this last year. I'm not going to spend a lot of time preambling on it here. We've got a huge amount to get through, an excellent panel in a couple of minutes with the Bank of Thailand and Bank of Israel, as well as Wolfram Zeiderman, who is Chief Executive Officer, Giesecke and Devrient Currency Technology. And Wolfram, it's great to have you with us and to work with you once again on this excellent and interesting topic. So over to you, Wolfram.
Yeah, thank you, John, for your kind introduction, and a very warm welcome to all the esteemed speakers and guests who have joined us here today. It's just on time that we launch this survey report and debate jointly a call for action regarding CBDC, right after announcement on stablecoins that I may call the next Libra moment. The recent years have been a testament for a lightning fast pace at which our world can transform. My feeling is that technology-driven changes are progressing faster and faster, especially when I think about the past 5 years. Digitization has revolutionized the way we communicate, we work, we access information, and fast-emerging disruptive technologies have a substantial impact on the economy and society. The financial system is also subject to this transformation and is currently undergoing significant changes, and we see a lot of strong innovation. Consequently, it's an imperative for central banks also to evolve in order to effectively carry out their mandates in a rapidly evolving digital landscape. We will debate today, John, that the issuance of CBDC would be one of the most effective tools towards addressing the major challenges that we are currently facing in the finance industry, fostering financial inclusion, ensuring public money's role as monetary anchor, reducing dependencies in digital payments on just a few private players, increasing efficiency of today's payment systems, which is often burdened by costly friction, high fees, insufficient automation, and fragmentation. CBDC can promote a more inclusive, resilient, and accessible financial system. To fill the gaps, I think it's essential that central banks keep up and collaborate closely with the private sector. CBDCs is not just about central banks taking over the role of private providers, not at all. It's about maintaining the current role to ensure monetary sovereignty and economic growth. By offering a financial public infrastructure, central banks can pave the way for innovative financial products and services, promoting healthy competition amongst private entities while also reducing fragmentation in the financial system. To draw an analogy and exhibit the potential of platforms, allow me to quote a voice from the year 2007, and actually it came from the other Steve. There is no chance that the iPhone is going to get any significant market share. We all are aware of how that prediction turned out. And I believe CBDC will have a comparable impact on people's lives. So welcome to the launch of this new OMFIF report, a call to action to set the course now.
Thanks, Wolfram, and looking forward to discussing that with you. You have Pirapong in just a moment. Plenty to get into, as you say. Katerina, over to you. Let's go through the results, and then we'll get into a discussion on it.
Thanks, Thank you, and hello everyone. And thank you for joining us for the launch of Digital Monetary Institute's latest report on central bank digital currencies, done in partnership with GND. I'm Katerina Liu, a research analyst at OMFIF, and I've been working on the report along with my colleagues for the past few months. And it will be a pleasure for me to talk you all through the key findings today. So DMI has collaborated with GND to explore what is delaying retail CBDC issuance and what are the central bank's motivations and concerns behind issuing one. We also hope to shed light on the benefits of a retail CBDC and unpack the implications of a delay in issuance. These insights are based on an OMFIF survey of 34 central banks and on extensive interviews with 5 representatives from central banks. So when do central banks intend to issue retail CBDCs? Our survey has found that most central banks, 81% of them overall, have either already issued a CBDC or still intend to issue one at some point. The greatest share of developed market respondents, 45% of them, expect to issue a retail CBDC within 3 to 5 years, as seen by the tallest light blue bar in the chart. This is in contrast to emerging market respondents, where 29% of them expect to issue a CBDC in 3 to 5 years, and 19% expect to issue one within 1 to 2 years. It is clear while many central banks are cautious about retail CBDC issuance, they still remain positive on implementing it within 5 years. The survey has also found that 53% of central banks intend to increase their internal resourcing for the exploration or implementation of a CBDC. And what motivates central banks to issue a retail CBDC? There is a clear split in motivation among emerging market and developed market respondents. 44% of survey participants from emerging markets selected financial inclusion as their main motivation, shown in the chart here by the topmost dark blue bar. Meanwhile, 50% of developed market respondents chose preserving central bank monetary sovereignty as their motivation, as shown by the longest light blue bar at the top. Issuing a CBDC may preserve the central bank's control over the financial system while promoting confidence in the currency and reducing reliance on external actors, particularly in an environment where the private sector has dominated the provision of payment services. However, it is clear based on this slide that many central banks still have concerns over issuing a CBDC. In particular, low adoption remains a top concern amongst emerging market central banks, where 56% of respondents chose this option, as we can see by the topmost dark blue bar. The survey has also revealed an increase in the share of respondents who are delaying their CBDC issuance timeline. The reasons behind their delays are varied, ranging from legislation, concerns with regulatory and governance frameworks, or unforeseen economic challenges, which we all explain further in further detail in the report. Despite the central bank's concerns, there is still progress in almost every area when it comes to addressing the technical challenges in these features listed here on the y-axis of the chart. Last year, offline payments was seen as the most challenging feature of designing a CBDC by 41% of respondents, as shown by the top light blue bar. However, this year, fewer respondents, 36%, demonstrated by the top dark blue bar, think so, reflecting progress in this area. However, there is instead a sharp increase in the share of survey respondents who think that user experience is the most challenging feature of designing a CBDC, up to 27% from 10% last year. We believe this reflects progress. Central banks' focus seems to be shifting to optimizing user experience as they move closer to issuing a CBDC. As central banks shift their focus from exploration to experimentation, a question should be asked: why should there be a need for urgency to issue a retail CBDC? The report broadly breaks down the response to this question into 5 parts. Financial inclusion, as mentioned earlier in the presentation, is a motivation for many emerging market central banks behind issuance, and a retail CBDC will be important for providing an easily accessible means of payment for all citizens and users. Offline functionality can also help benefit financial inclusion by expanding reach through ensuring access for users living in remote areas, for example. However, offline functionality is also important for ensuring the resilience of digital payments by offering a fail-safe mechanism guaranteeing the ability to pay in the event of an outage. A retail CBDC should also serve as a platform for innovation by integrating private sector innovation with central bank oversight. This could address fragmentation, drive adoption, and improve usability. There could also be a potential for the CBDC to improve cross-border payments. By addressing fragmentation and interoperability issues in the global landscape, a CBDC could potentially help cross-border payments become faster and more efficient. Overall, CBDCs could help address the broader structural issues, where CBDCs have a wider scope than instant payment systems to address inclusivity, cross-border interoperability, and resilience. Ultimately, the role of a CBDC is to help establish trust in the financial system. The private sector has a strong track record of innovation, but its dominance of payments may pose challenges to monetary sovereignty. CBDCs can be a public alternative to complement private sector initiatives. In other words, issuing a CBDC will preserve the central bank's role as the anchor of trust and security in the financial system, while encouraging private sector innovation. The foundational digital infrastructure provided by the public sector is indispensable for digital payments. And by bridging the gap between the traditional public money and the digital economy, CBDCs could ensure that payments remain a public good. To briefly conclude, our research shows that most central banks that we have surveyed do believe in the importance of issuing a CBDC despite their present delays. We can see this through the technical progress central banks have made towards addressing the challenges of delivering a CBDC. Overall, issuing a CBDC has the potential to strengthen central banks' monetary sovereignty and advance broader policy goals, while providing a foundational digital infrastructure to foster private sector innovation and reduce fragmentation. Thank you very much, everyone, for listening. We covered these discussions in much more detail in the report, which I encourage you to download from the QR code shown here or from the links provided at the event. I'll now hand you all back to begin the panel discussion. Thank you.
Thanks, Katerina. Plenty for us to talk about, and that's what we're going to do now with Yoav Sofer, who's the project manager of CBDC and advisor to the Deputy Governor at the Bank of Israel, Pirapong Tanagith, who's Deputy Director of the Digital Currency Policy and Development Unit, the Bank of Thailand, and welcome back. Wolfram. This is an interesting time. We'll come back to the executive order from Donald Trump, apparently banning CBDC in the US that everyone's talking about in a little while, and we've already got questions coming in from the audience about that. Nevertheless, I've heard already in plenty of other places, including HKMA last week, actually, that it doesn't change anything for them in terms of their own projects. So let's get into that a bit. Let's start with you, Yoav. Donald Trump's executive order or no, what do you think the rationale is for CBDC from your point of view still?
Thank you, John, and thank you, everyone, for having me on this very distinguished panel. OMFIF DMI has been contributing a great deal to the global discussion about CBDCs, and I'm honored to take place. Needless to say, by the way, just to say one thing about the report, I was, of course, happy to learn that maybe contrary to common thinking, appetite to CBDC is still evolving, if to quote the report, and this is of course, very important for people, for us in the field. So, you know, the report speaks about what you call a central bank monetary sovereignty. But I'd like to maybe frame it a bit differently. It's really about preserving the role of central bank money in the digital era. So while most central banks, mine included, ours included, have no intention whatsoever to stop issuing cash in the foreseeable future, at least, or maybe even beyond that, there are more and more economic activities in which we actually simply can't pay with cash. And that means that private money is gradually increasing its share in payments, even if this is happening in a different pace in each jurisdiction. So we really need to ask ourselves, are we actually okay with that? Many people in the profession, many distinguished people in the profession have a valid opinion according to which it's actually okay if payments, or at least digital payments, end up completely privatized. And that actually they think that the singleness of money is well enough preserved by the fact that the central bank takes care of finality in wholesale settlements. And if you have, of course, sound supervision for the banking system, that is also very important. But other people, myself included, we are of the opinion that it is actually necessary for public money to maintain its role also in the retail space in the digital era. I've actually spent some time trying to find empirical research on this question to see, you know, which side of the discussion is actually more correct empirically. I don't think there is actually an empirical answer to this. So I'll just say this: those of us who believe that the public must have access to central bank money in the digital era must end up issuing a retail CBDC at some point of time. So this is kind of a major topic. Maybe just another 1 point. If you follow our work, you know that the Bank of Israel has actually identified 6 possible motivations for potentially issuing a CBDC. I won't review all of them right now, but just to name them, there are competition, innovation, resilience, cross-border payments, privacy, and fighting the black economy. If I can take maybe just a minute to speak about competition and maybe a few about the others later in the discussion. So yes. The banking sector in Israel, and as a result also the payment sector, is relatively concentrated, and its level of competition is perceived to be too low. The way we are thinking about the digital shekel in Israel, we believe it would serve as a basis for a large number of entities that could actually enter the payments space as PSPs, or what we call ASPs, additional service providers in the digital shekel system, and they could increase competition in payments. And this also goes to the role of central bank money, which we mentioned earlier, because cash has always been there as a competitor in payments. And as cash becomes less and less usable, its competitive power disappears. But by the way, in our view, we think that CBDC could also contribute to competition in the deposits space, even though we all usually don't think about CBDC as kind of a means of a means of investment. But the competition in deposits has proved to be limited in the recent cycle of rising rates in Israel, when banks have quickly raised rates on interest on credit, but pass-through to rates of deposits has been slower and not so complete. So you could think that if you have a CBDC, banks may want to retain deposits by offering better rates on their deposits. So this way, persuading people not to convert their deposits into CBDC. And in this regard, we are also actually thinking, one last sentence, in this regard, we're also actually thinking about perhaps remunerating CBDC. So maybe even actually paying interest to CBDC holders. And in this, I think we are relatively unique in this space.
Well, and we'll explore that, Yoav. That's I suppose, a controversial point. Commercial banks say that's potentially a financial stability risk. There are plenty of people, including the ECB, who kind of roll their eyes at that point and say it won't be. But I'm sure we'll explore that a bit later. Just to clarify, Yoav, you think the regardless of the prevalence of digital payments in the private sector, you think a CBDC will continue to be necessary for essentially symbolic reasons, that still needs to be there for belief in the currency domestically?
No, it's not really symbolic. I would say it's actually financial consideration. I think the trust in the currency and the singleness of money, you don't actually need CBDC to be prevailing in a few tens of percent. You just need it to be around there so that people actually have the capability of using it when they want to and converting to it when they want to. And we also speak about the innovation values maybe later down in the discussion. But just for that, I don't think it's symbolic. I actually think it's a financial consideration.
Okay, and your point, as I've heard in plenty of other cases, you actually wish to foster the private sector through doing this rather than to thwart them, and we'll come back to that as well. Pirapong, tell us about it from the Bank of Thailand's point of view. You're a notable and progressive central bank when it comes to exploring digital money payments, also cross-border payments. Tell us what your motive is to consider CBDC in Thailand.
Okay, thank you very much for this kind of
thank you for joining us
as well. Yeah, Bank of Thailand have explored quite earlier in 2018 for the first of the wholesale CBDC in the domestic use case, and then we expand it to the cross-border, which become right now it become the cross-border project in collaboration with many central bank, which is the project Enbridge. On the other hand, we also explore for the possibility of issuing of the retail CBDC. I think the main reason behind some similar to what you have said is about to maintain the role of the central bank to provide the digital access to the central bank money over that. But beside of that, we also see the potential of the retail CBDC, not only as a payment system, but as a cloud infrastructure that can facilitate or can can accelerate the growth of the innovation use case. And so we try to launch that pilot in order to see about the technical assessment and also to learn about what kind of preparation, both technical and the business, in order if we decide to issue in the future. Just like how to prepare about the amendment of the legal, how to recognize in terms of the accounting, how to prepare the operation of the circulation, the issuance and redemption of the CBDC, and so on. And on the other way, we also explore in terms that if we can provide the CBDC system, including some kind of the programmable functionality, can it drive or can it accelerate the way to scale the innovation use case that come from the private sector as well. That's
okay, as
motivation.
Yoav was just saying, so you want to see if you can build a platform for the private sector to innovate on top of, as Yoav was just talking about. And just for the benefit of the people watching today, Pirapong, have you made a decision about whether you'll introduce it, or you're still in the development and exploration phase, the Bank of Thailand?
At first, when we formulate the pilot, we would like to learn as much as if for the preparation if we decide on that. After the pilot that we publish the conclusion, we already written that we see the potential in terms of the technical assessment that with the proper solution for the CBDC, it can achieve the objective for serving as a central infrastructure, the infrastructure for digital public money, and also it has a potential, yet come with the challenge for the improvement on the programmable functionality in order to fulfill on more use case on that.
Okay.
Unfortunately, after that conclusion, when we compare on the basic functionality of the retail CBDC at the time of the pilot, it seems that the user experience and also the functionality and the operation become quite similar to the way of the adoption of our past payment system. The people are very used to the way they use the QR code and the fast payment system in our country, and we see quite less advantage on the CBDC compared to them.
Okay.
On the other hand,
thank you. And this is something that we've been exploring, this tension between the idea of whether a central bank merely needs to help a instant payments platform, or whether that is also CBDC where people are holding digital public money. That's and that is an interesting conundrum. Well, perhaps we'll come back to that. Before we move on to discussing the ramifications of the executive order in the States, which I think is important, I just wanted to find out where you both are, Bank of Thailand, Bank of Israel, on technical challenges. We seem to, as you've heard in the report just now, moved on a bit there. People were scratching their heads in particular about offline payments last year. I mean, they still are significant. It's a very complicated area, and have moved on to the practicalities of developing the user experience. Yoav, tell us where you are on the technical design. Are you, setting aside the political and financial stability issues and so on, are you technically relaxed about the introduction of CBDC at the Bank of Israel?
So, it's a question that is interestingly being kind of phrased. I would say there shouldn't be any complication whatsoever to issue a CBDC per se. I mean, at the end of the day, if you just allow people access to an account at the central bank, then by definition you have a retail CBDC. Okay, so this is not difficult. You know that the technology exists, but of course this is not what we want to achieve, right? We want to achieve something that can promote innovation, that can promote conditional payments, micro payments, perhaps offline, privacy, of course, privacy by design, maybe even anonymous payments to some extent, to have interoperability with other payment systems, to allow seamless funding and defunding of your CBDC wallet, etc. So, of course, if you want to introduce something interesting, this is where it gets more interesting and perhaps even more complicated. It may be that down the road we may have to prioritize and maybe not include all of these features, maybe not in the beginning and maybe not even all along the road. But our design so far has been technologically agnostic. So we have been thinking about the business features that we want to achieve. We haven't been doing a very, high-level technological research. We have been doing POCs, but not attempting to kind of breach the frontiers of science here. We know that other central banks are doing this. I think that if we will want something as a high priority, it seems like the technologies are out there to be able to achieve that. And at the end of the day, it's really a risk analysis and a cost-benefit analysis of how something is important for you to achieve, and what are the risk-based measures that you need to put in place in order to achieve. All of these functionalities that I just mentioned are out there, are available. Yep. Of course, some of them are more complicated, others are more straightforward, and it would need to be judged based on a risk analysis and cost-benefit analysis.
Okay, thank you. And with a session we did with the European Central Bank before Christmas, the discussion was less about the technical challenges, and Wolfram, I'm going to ask you about those in a moment, and more still the policy decisions around holding limits, for example, and the commercial model for private users to deploy it and so on. So, and we'll come back to this as well. Pirapong, in terms of technical analysis, would the Bank of Thailand be ready to go soon if it wanted to, and what challenges do you still want to solve?
I think, to be honest, the answer for technical readiness cannot come from us, the central bank alone. It should also a unified decision from both us and also the private sector who are in charge of engaging with the retail payment user. So that's why in our pilot, we also include the feedback and the comment from both the commercial bank and the payment service provider, since they will be the one who truly distribute the CBDC toward the public by providing the wallet management system on both online and the offline. So that's why before we do the pilot, we have to do the POC first, and it took times even for this pilot to, I could say it almost a year for us to prepare on the operation on the central bank and also for the development of the commercial bank. And by that, we learned that if we decide to somehow to jump out to issue the CBDC, by learning from what we have to prepare on the process of the bank to develop their own wallet application to follow the cyber security process, it should take around 6 months to a year for the technical readiness for that. So that's why we know at least for that to prepare for the future on that part.
Okay, and actually we had a question from R3 about the distribution of CBDC through commercial banks anyway. So to an extent, it also depends on the distribution model, what technology is required. And we'll come back to that question from R3 as well later. Wolfram, just briefly from you, and we've got over 50 central banks with us registered today, and I expect you visited most of them. What are they worrying about in technological terms, and how has that moved from last year? Do you think the survey findings reflect what you're hearing when you visit these central banks to help them solve retail CBDC queries?
Definitely. I think we made so much progress around the globe in defining what CBDC is and designing strong architectures that allow to fulfill all the requirements for public money, because it has to be performant, it has to preserve privacy, it has to work under all circumstances, and the various challenges that you also have just heard about in the summary of the report findings. Where I can comfort you that the industry has done their homeworks and we have solved those issues. So technically, I don't see a big hurdle in between a possible go-live scenario. But of course, what Pirapong mentioned is very important. You have to include the entire ecosystem into getting prepared, into agreeing on performance standards, into agreeing on security standards, in order to effectively launch a CBDC to the general public, because it doesn't help if just the instrument is issued on a single wallet and cannot be used in transactions. So there is why it has to be a public-private partnership and collaborative approach to get the whole ecosystem up and running. But that's also not a miracle, because the technology that can solve that is using existing infrastructure, is using existing knowledge base and competences in the various players' teams. And so I'm confident once it's orchestrated well, it can be done in timeframes that Parapong mentioned already.
Okay, good. Maybe we'll come back to cybersecurity. Obviously, that's a bit of a concern with central banks as well. Briefly on this point, Yoav, I just mentioned we had a question in from R3, which is many are CBDC models of distribution through commercial banks. Retail users don't have a direct claim on central bank money. Should we rethink the definition of our CBDCs? It's a good, interesting question. Depends on the model. What are your thoughts on that one?
Well, very simply, our retail CBDC model also has distribution through commercial banks, or what we call funding institutions, but retail users would have a direct claim on the central bank. And my answer would be that if retail users do not have a direct claim on the central bank, then it's not a retail CBDC. You can call it whatever you want, but this is the primary definition of a retail CBDC, that retail users have a digital claim on the central bank. Yeah, otherwise, it's another animal. It's not CBDC.
Yeah, exactly. Right. Let's get on to the executive order in the States where I am now. Actually, I had a question from Moody's on that, from Olivier Kemla. We want to explore what this means. I think I'll start with you, Wolfram, on this one. What do you think the executive order means from Donald Trump? I know plenty of people among the central banking community are slightly scratching their heads whether he's accidentally forsworn wholesale CBDC, which could be pretty useful if markets believe that the singleness of money is needed with public money to settle in capital markets. So maybe he meant that, maybe he didn't, and whether stablecoins can fulfill that role. We've heard other central banks saying they're worried about that. Wolfram, what do you think?
Yeah, well, I don't want to go into speculation here, but I think it doesn't definitely have an impact on our discussions. And that's why I call it the next Libra moment, because clearly to drive the digitization and to drive the tokenization of assets is a strong point in further developing the global token economy, which I think is definitely the right thing to do. I would appreciate if there would be more thought put into the question on how to digitize assets and how to create interesting business models, how to create new products and services for citizens and businesses, while there is a bit too much focus maybe on stablecoins. And clearly we all understand that there is an attractive business case behind. And of course, you can debate whether the benefit of that business case should be going to the public or whether it's a private model that we would like to promote. I found it interesting what Piero Cipollone from the ECB currently stated, that there is a fear that the global promotion of US dollar-backed stablecoins would further disintermediate banks. I think that's an interesting aspect one needs to consider. And I'm sure that if you have a debate on sovereignty of payments, that some currency will definitely start thinking whether it would now not be even a more urgent time to think about driving CBDC as a platform for innovation based on their currency, rather than to have their businesses in the country run on private money, not denominated in their currency. So I expect a lot of discussion coming from that communication.
Right. So I think you're saying, Wolfram, we might have the rule of perverse consequences, that a rule designed to protect the banks might damage them. You're not going to say yes or no to that, but I think that's an interesting point. Yoav, you're sitting in a central bank and have watched the Federal Reserve have its hands tied just now, we think. What do you think about that? Obviously, the world's banks in dollars, and if they can't exist in a public form, in digital public form, maybe that's a big deal. What do you think?
So, John, forgive me if I won't relate directly to the presidential executive order. I'll just say maybe things. First of all, having watched the debate regarding CBDCs in the United States over the past year and a half or so, even before the elections. I thought that this debate was kind of lacking the discussion regarding the privacy capabilities that CBDCs could have and as have been featured by the designs offered, for example, by the ECB, the Bank of England, and ourselves. So I just thought that the public debate there was kind of, and I think there were Fed governors that have said that as well. As to the potential effects of the recent developments, I'll just limit my comment to this. As a small central bank, we've been learning a lot and benefiting a lot from the work of other central banks. And the Federal Reserve has been doing some important work and has been leading the field, for example, with Project Hamilton and with their participation in a global, work such as their contribution to the group of 7 central banks under the BIS and the G20 and others. So it would just be a pity if all of this important work done by the Fed, regardless of a decision that the United States could do or could not make down the road, and of course every decision is legitimate, but it would be a pity for the community if all of the work and the leadership that has been done by the Fed would not continue. And maybe I should just stop you on that.
Okay, no, it's fair. Connish, they've got done some excellent research and know about it as thoroughly as any of the other central banks, I have to say. I haven't spent time with them. Pierpont, we won't spend much longer on this question, but do you think the recent changes in the US, including an executive order banning CBDCs, are going to make any difference to central banks elsewhere in terms of their decision making on CBDC? From your point of view,
I think each of the central bank have their own reason and rationale for decide on the CBDC, whether wholesale or retail one. I think it will serve or fulfill. And as for me personally, as a technician, I believe that the CBDC can coexist with the payment infrastructure and even to coexist with the private digital currency. Either it's a stable coin or the tokenization. And I even imagine that even in one country, there is a possibility that there can be more than one CBDC system, since each of the system can have the feature that fulfill on some aspect, and they have to harmonize and work all together along of the various kind of the digital money anyway.
Yeah, exactly. Well, then there's the interoperability theme that we won't dwell on here, but is important. A topic that's come up often in work we've done before, actually, with important work we've done before with G&D on privacy, hangs in the background. Actually, the increasing the discussion that we have is that central banks can help protect privacy rather than attack it, and maybe we can explore that as well. Versus private sector companies that might want to seek rents, and that's certainly something that the ECB says. Wolfram, we've heard from both Yoav and Pierpont. They want to introduce CBDC as a basis to foster innovation in the private sector, and that was, for example, the reason that PIX was introduced in Brazil and seems to have gone quite well. Even if you look at M-Pesa in Kenya all those years ago on mobile phones, that seemed to have that effect. Any thoughts from you on how CBDC can create a platform for innovation in the private sector as a result of this public sector intervention?
Yeah, the potential of CBDC technology is much wider than just person-to-person payment, which is currently addressed by instant payment solutions, which definitely have their markets. But that is just one of the applications that CBDC can address. And by providing a common and interoperable standards, granting access for all market participants, that goes even beyond traditional players, I think CBDC can create a new market based on that public infrastructure that allows those market participants to create new products and services, because it's not just about the citizens, it's also about businesses. And I believe that the private sector could strongly innovate on digital business models where digital assets can be traded, including programmable payments, supporting offline payment capabilities with hardware wallets or solutions to enhance security is an innovation that would serve citizens to support privacy, as well as to enable an always-on digital solution, which I think currently is not existing yet. I think also commercial banks can address new target groups. CBDC can be the off-ramp or the on-ramp to financial inclusion. Since you could add to the basic transaction functionality, you could add additional functions like going into micro credits and solutions where typically the world is not included yet. Special purpose wallets is another element where merchants could be enabled to introduce CBDC-based customer loyalty programs that would then again allow for further new business models, pay-per-use, micropayments. There are a lot of potential ideas that can benefit from the network effect that a public payment instrument could provide. So coming back to that analogy of the iPhone, when the iPhone was designed, there wasn't the idea of the app shop. At least it was not existent. It only came 5 years later. And I'm sure that the designer of that platform had no idea what the ultimate use cases would be. And today there's no single digital model without an app. So I think we have to lay the foundation and set the rules on how to engage in that ecosystem to really push for innovation and for growth of the digital economy.
Okay, and certainly the Bank of England says that in its report, build it and we think they will come, in terms of the private sector innovation that take place potentially on top of a CBDC if it were introduced. Pirapong, any specific thoughts on innovation that you would like to see take place on CBDC? And I'll come to you have on that as well.
Yeah, we also considering that during the innovation track that we set in parallel of the functional pilot. In that track about the innovation, we also seek out the idea from the private sector, since they are the one who introduce the innovation service to the public, and that's why we arrange for the hackathon challenge for the private sector to submit a use case by adopting retail CBDC as a payment infrastructure, and then to introduce on some innovative use case. There are various kind of the use case, including the green, the DVP, universal escrow, and also the case of the parental control or the conditional payment that Wolfram said earlier. We adopt the winner case, which is the parental control in the simulation of the programmability feature of the CBDC system. It turns out that we saw the potential that if we can provide the CBDC as a solution for the ecosystem, so that's why the common standard and even common solution of the wallet system, including the conditional logic attached with them, and it is common among the service provider. So if someone, as like a fintech company, would like to introduce some use case, when they come into connect with one of the service provider, they can commonly adopt to the other service provider, since it is a common infrastructure in the first place. Unlike the current financial system that they have to deal on the proprietary core bank system, which is different.
So you provide the means for interoperability between different payment systems, in other words.
Yeah. So we nickname that the horizontal scale of the innovation. So adopt the use case on one service provider, it can horizontally adopt on the other one.
Okay, well that's helpful. Just before I go over to Yoav on that, Wolfram mentioned financial inclusion. I think that was part of a consideration. You were part of this, it's World Bank Thailand, but I think financial inclusion was also a consideration. Tell us briefly about that. That's often talked about in the case of CBDC as well. But how much was that in your thinking, Pirapong?
In the case of Bank of Thailand, I think we define the objective of the innovation of CBDC quite a bit different. We are not mentioned about the direct inclusion from the public, but we rather see the potential for the inclusion of the intermediaries or the payment service provider. In other words, it's like CBDC can serve as an open access to the risk-free money. on the level playing field between the commercial banks and also the service provider. And on that basis, the service provider can innovate or can introduce additional basis, and that will benefit to the public in the later on. So that is the definition that we do for the inclusion in our case.
Okay, and I mean, a contingent point in that, of course, is people sometimes talk about the financial stability risk of CBDCs. In your case, yours as well, we've been talking all the time, essentially as a cooperative and collaborative effort with commercial banks rather than an attempt to displace them. And it sounds like that's also true here. Yoav, on the innovation point, what innovations, I mean, we might not know, of course, as Wolfram's pointed out, but what innovation might you want to see from the introduction of retail CBDC in Israel?
Thank you. And I think this is really the most fascinating aspect of this whole discussion. We recently completed what we call the Digital Shekel Challenge, which was actually our version of Project Rosalind, which was done in 2023 by the BIS and Bank of England. And in looking back at this challenge, I think it completely proved the hypothesis that Wolfram has just laid down here a couple of minutes ago. And that is that the public-private partnership, also known as a two-tier CBDC system, can actually serve as a groundbreaking platform for innovation. For us, it was just amazing to see how we had 14 different entities competing in the challenge. And they range from global giants such as PayPal all the way to two-people garage startups that competed. And they came up with such innovative use cases. And these were most of them were completely different from the 18 use cases that were demonstrated in Rosalind based on the same API. So this set of APIs has produced more than 30 interesting use cases. And it was interesting to see how some of the participants actually use those APIs in a completely different manner from what we or the designers of those APIs would have thought about. So to hang on Wolfram's analogy of the iPhone, it's kind of like, maybe 20 years ago, someone thought it would be a good idea to put a camera on a smartphone. And today we already have QR codes. I'm sure that the first designer who had put a camera on a smartphone never thought that QR codes would develop out of that. So really, I think the golden path would be to find the balance between the functionality that the central bank should create, or the APIs as they are in the Rosalind case. It doesn't have to be based on API technology, but the central bank needs to kind of offer the iOS or the Android of this, and then for the private sector to come and build those apps and those use cases. And I think it's really a promising platform here, and also because it actually promises to be open and not to create walled gardens as we sometimes see in payments. And it actually, what we see in Israel and in other places is that if you want to use some kind of special functionality, you have to be on that network, on that system. You and I have to have an account with the same app, okay, if we want to use the feature that this app actually offers. And the way we're thinking of the digital shekel, and the way it was also in the challenge, that I can be with one PSP, you could be with another PSP. It's kind of like in the cell phone industry. I can call your phone. I have no idea who your provider is. It doesn't really matter to me. Okay, I can make an innovative payment from my PSP to your digital shekel wallet, and I don't care who your PSP is. So in that sense, I think that the digital shekel can really bring a promise. And also, just to conclude another point of this, I think retail CBDCs actually have the promise of bringing innovation to the common man, okay, to the customer. Whereas those who think innovation would come from wholesale CBDCs only actually think about innovative use cases between the financial institutions, not necessarily trickling down to the end users. And those who think that crypto could bring the innovations actually think of those tech-savvy individuals who are willing to open in a not always safe, in a non-regulated landscape. And retail CBDCs actually have the promise of bringing the innovation all the way to the last customer, to the small business, in a safe and regulated environment.
Okay, thank you. Wolfram, I was quite struck listening to you just now, actually, how important interoperability is in the field of innovation. You'd think that maybe innovation is about allowing green fields to people to develop in, but actually listening to you, it's actually about creating an environment where things can interact with one another. Tell us a little bit about CBDC and interoperability, Wolfram. It's an important topic that comes up time and time again.
Yeah, absolutely. And I think you have already gave the principle that stands behind interoperability. And overcoming fragmentation of today's world. Because we don't want to go back into history where there was once a situation where various banknotes have been printed by individual commercial banks, which ended up in different risk evaluation and different exchange rates. So central banks were created to emerge as the sole issuer of cash, and that's the concept of the singleness of money, which provides takes risk out and provides the basis for modern economies. And I think here again we are in a similar situation. Now we have the historic chance to design the base platform and bridge fragmentation by designing an architecture following common standards and promote interoperability. And this works easily. We have done a pilot also with the Bank of Ghana, and here in the online pilot, we were able, together with the participants, with the ecosystem, with a commercial bank, with a mobile money provider, and a fintech, to create that interoperability that users could switch on the app between mobile money points, bank deposits, and CBDC, and that drives growth, and that brings the necessary foundation for a currency to be used, and which ultimately also drives sovereignty and growth in the country.
Yeah, well, I'm quite interested in the side with that interoperability and innovation are symbiotic. That's quite a useful thing for us to think about. We haven't got much time left, but there are a couple of other things I want to get onto, including cross-border and one or two design issues. We had a question in about holding limits. I mentioned earlier a session we did with the European Central Bank before Christmas. That was one of the tricky issues. They know the holding limit will probably be low, but still hasn't been set. It's a slightly complicated area, of course, with natural stability concerns. Yoav has mentioned, on the other hand, you might be able to apply a little bit of gentle pressure to commercial banks to pass on interest rate changes more quickly with CBDC potentially. But Perepok, tell us about your thoughts on designing holding limits. Say one of an audience members asked a question about whether holding limits will be the Achilles heel of CBDC. In other words, might thwart adoption potentially.
Instead of saying whether it is a Achilles heel or not, I think we have to thought about the rationale behind why we decide to have a holding limit. I think it comes from the two complete different opposite perspective about the usage. One thing is about the level of the anonymity that the people can use is just like the cash. On the other side is about the concern about the money laundering and crime associated on the so there must be some kind of the control in order to balance on this side. And I think holding limit is just a simplest form that easily to config and then can trick into the balance. But in order to serve for more adaptive and more natural way on that, I think maybe the involvement or the integration or the option of other kind, just like if we concern about usage of many excessive CBDC for illicit activity, we can apply about the identity system toward the purpose of the payment by setting just like the tier, multiple tiers of the wallet depend on the level of identity and the perspective of the transaction. So that's why it's just a matter of design. Use the holding limit is just the simple way to do, but it can be extensively designed to more flexible way.
I think it needs to be quite a flexible framework potentially, which might change in response to circumstances. I know the People's Bank of China already thought that when they introduced the E1. You have very briefly to you on holding limits. Do you have a view? Then I'll move on to cross-border.
On holding limits, yes, we have been doing some work. Hope to come up with it relatively soon. We believe actually that holding limits should apply not, well, I'll put it this way. We believe that holding should be allowed not only to individuals, but also to businesses of all sorts of sizes. We believe that would contribute to to the development of use cases, and that actually creates a more complicated holding limits landscape, because you need to think of limits of different sizes to different kinds of end users. And we believe that efficient waterfall and reverse waterfall mechanisms could actually mitigate the risk of damaging the user experience. But of course, there will need to be more work done on this. It's interesting how often you can hear from the same people that CBDC would not be interesting and would not be adopted, but that you also need very strict holding limits. So you need to find the balance between the two.
This is a very good point you have. Just briefly, tell us more broadly where you are with the digital shekel. What's the likely implementation schedule?
Thank you. I can't speak about the implementation schedule yet, but I'll say the following. We recently completed a 2-year kind of initial design phase. And actually, I hope that in a very short number of weeks, we'll be able to publish a document, a high-level design document, on which we will be requesting feedback from the ecosystem. This design is mainly business kind of oriented, and it's technologically agnostic. So we're not thinking about a specific technology. And we are now starting a 2-year work program with several work streams. I won't name all of them, but for example, we actually want to start assessing technologies. So to actually stop being agnostic and actually ask the industry about what they think about our design and how technologically feasible it is. We are thinking to conduct some kind of a cost-benefit analysis, design the regulatory framework and other topics. And then at the end of this, we will need to actually submit a recommendation document to the management of the bank, whether we, the project team and the steering committee, actually recommend to continue or not continue with the potential launch of a retail CBDC. So, it would probably take time. As I said in the beginning, we're not looking to do something simple. If we do it, it will need to be interesting and innovative. So it will probably take time. We have no ambitions to be, the first central bank among the OECD economies or something like that to launch a retail CBDC. We are learning from others. But do stay tuned. I really hope that in just a couple of weeks, you will all be able to see this design.
Well, when it's ready, why don't we do a separate session on the findings? We'd love to do that. So let us know. Will it go back to Parliament? Will it ultimately be a political decision as it will be in other jurisdictions?
So looking at our design so far, it seems that if we want to implement this design, it would require legislation. So probably, yes. So we'd probably need to go both to the government and to Parliament in order to get through this legislation that would enable this specific design.
Okay, great. I want to move briefly on to cross-border. Cross-border comes up a lot. A lot of people see opportunities there. The projects like Agora were quite intriguing. They looked like creating potentially a cross-border framework for CBDC and regulated institutions. Maybe that's going to go backwards now without the Fed. We're not sure. Watching that closely. We had a question in from Banca d'Italia about whether CBDC could improve the FX market. I know that will have that will frighten commercial banks on the call. It's quite an important business for them, unless the reference rates and trading is being done by them, which presumably it probably would end up being. But what do we think about cross-border CBDC and its interactions with FX? You've been involved in experiments on that. It's interesting and difficult area.
Yes, we were involved in a project Icebreaker together with the BIS and the central banks of Norway and Sweden, where I think we had done some initial steps in laying a potentially very interesting global system that could support interoperability of retail CBDCs. We could not continue this work alone, and unfortunately, it has not continued. So far, we are not seeing any kind of development towards a global interoperable retail CBDC system, and of course, the geopolitical developments that have taken place since are also kind of reducing the probability of a global system like that. Although there could be bilateral or multilateral engagements. Given this development, our design has also been focusing on what we need to do in order to ensure that if there is such a system in the future, our digital shekel will be interoperable with that, given the information that we have today. So you could assume, for example, that ISO 222 is one of those requirements in this regard. And we're also thinking, okay, assuming that there will be no such a system in the foreseeable future, how do we make sure that if someone is holding a digital shekel wallet, they can still make cross-border payments based on the current infrastructures that are available? So, if I can make a payment from my bank account in Israel to your bank account in England, we want to make sure that the least that we ensure is that I can make a cross-border payment from my retail CBDC wallet in Israel to your bank account in England. So how to connect the retail CBDC system into the existing cross-border system.
Yeah, that sounds quite likely, I think. So, Pirapong, very briefly from you on cross-border, cross-currency, and then Wolfram, we'll go to you for closing words, I think. Pirapong, cross-border and FX.
Yeah, as I said earlier, that I believe on the possibility that there are multiple CBDC or even multiple payment system that include the interoperability that you have said earlier, that the retail CBDC may connect to the existing one, or even with the cross-border wholesale CBDC, and how to harmonize the interop. So rather than focusing on the waiving of the transaction fee or that, I think one potential that can be happen is that it facilitates the way to settle it faster than the current system. And what come in the effect of that? Will it affect for the policy? Will it affect on the dynamic of the velocity of the cross-border transaction? That's what we are focusing. Yeah.
Okay, great. Thank you, and thank you for joining us today, Wolfram. It seems to me that the debate is maturing and becoming more interesting about CBDC. Actually, notwithstanding what we've heard from the incoming administration in the US. And I want to thank you again for working with us on this report. Please, everyone, come to the OMFIF website and download the report. We'll keep doing it. It's obvious the conversation is changing within central banks and who have done a lot of important preparation work. I think maybe we'll see the benefits of it in the next couple of years, Wolfram. But over to you for a couple of final thoughts.
Yeah, thank you, John, and thank you, esteemed colleagues on that panel, to share your valuable insights. You could really gain from that conversation that there's a lot of maturity into that debate already, and I can only urge you to enter the next phase of the discussion and to drive a conversation with the participants of the ecosystem to define the value that can come out of a CBDC issuance, and to set rules of engagement, to work on the compensation models if needed for products that are similar to existing products that have a price currently, and to enter into that next stage, because I believe that when central banks come out with their plans to lay out the architecture and then engage the public sector into these discussions on how to build upon that, I think we could really speed up that discussion and move that digitization forward, which is for the benefit of all of us. And thank you very much for participating in that dialogue. I'm happy to also receive your questions and stay engaged. And thank you again, John, for facilitating this fantastic discussions and for hosting this event today.
It's a pleasure. And we thoroughly enjoy working with you on these things. And thank you very much. Sounds like you're right that the next discussion is some kind of grand bargaining on compensation models. I think will move the whole thing along. So anyway, thank you for joining us. Pirapong, Yoav, great that you joined us. And we're looking forward to hearing individually from you about your projects. Please join us on DMI Roundtable soon to keep us updated. Wolfram, schönen Tag noch, and thank you everyone for listening.